and bring me up here, everybody. All right, there we go. What is going on in the market? Volatility continues. I want to talk about Russia a little bit anyway. Really, what's funny about that is I don't necessarily want to talk about Russia as much as why I don't necessarily think it's as important to the market. Now, that's crucial what I'm saying there. To the market as some might think that it is, okay? Because ultimately, here's one of the main things we have to understand. The market only cares about what's actually going to affect our economy. Because let's just go back to the beginning here. And this is really important. I've had some people texting me even this week saying, Blair, why on earth is the market going up? Looks like maybe I lost connection here, but we're seeing our friends on YouTube. We don't have our friends on Facebook tonight. We've got our YouTube friends though. Remember, these Market Mondays are all posted on YouTube. You can get to them all of the 2+ years we've done on YouTube. You can see that backlog on searching our Tradeway channel. So right on the Tradeway channel there. But ultimately, you have, I'm sorry, I'm getting some technical difficulties in my end here, just some errors from the Facebook account. Normally we're streaming with our friends on Facebook as well and YouTube, like I was saying. You can always go back and watch those on YouTube. Obviously, we're going to have lots of folks watching this on recording later. So appreciate you guys joining live, but those of you watching on recording, glad to have you as well. So again, had a lot of friends. I shouldn't say a lot, but I definitely had some reaching out to me saying, why is the market going up? Even back in here, right? Why is the market going up? Well, a couple of things, right? And this is what you and I need to understand. If we go back to the basics of what is the stock market, okay, what is the stock market? Well, the stock market is an opportunity. We could define it in multiple ways, but it's an opportunity for you and I to invest in companies. And as those companies grow, we can share in the growth of those companies. Now, that's a very basic long-term investing definition, right? The stock market gives us the ability to buy shares, and if those shares appreciate, we can share in that appreciation, right? That's the idea. That's the most basic definition. Well, why go back to that most basic definition right now? Well, because if that's true, then you have to ask, why does the market care about any news item that doesn't affect companies appreciating, right? In other words, to make it really simple, if we think about the war in Ukraine, which, by the way, here at Tradeway, we are extremely sensitive to what's happening in Ukraine. So nothing that I'm saying today is diminishing or downplaying the extremity, the tragedy of what's happening in Ukraine. And certainly our prayers are with them. So don't misunderstand me on that level at all. But that's the whole lesson that I want to bring today on Market Monday, because this isn't just about the news item that's happening right now. Obviously, this is a pretty significant thing that's occurring. But the thing that we need to learn as traders is that while news can cause some short-term volatility, really, it's not about the news. And it's certainly not about news that doesn't affect our economy. Wall Street doesn't really care, financially speaking, not personally, but I'm saying financially speaking. They don't really care if it's not going to mean long-term impact on U.S. earnings, right? Is it going to impact earnings? That's what they're looking at. So the market starts to drop here, okay? And we say it's Russia. Well, that's what the news media says it was. And in part, that created some negativity, right? That's true. But it ultimately was at resistance, which we had from what? This line, and this line. If I draw a line off those three tops, right? This is what we teach you guys to do. Then this line is already there, right? We didn't draw this at this point. We drew it back here based off what? A very clear 1, 2, 3. We got barely above that for one day, and then we fell back down, recovered, and then it starts to drop. And the news media, well, that's what they do. That's their job. News media's job is to print, right? It's to put out a headline. They need some kind of news, right? It would be kind of boring if they always said the market hits a technical level. Now, I'm not saying that the news in Russia didn't have any economic impact or uncertainty, right? There's a lot of sanctions. We've heard a lot of different things about Russia. They're being they've been sanctioned, they're being cut off from the world banking systems in multiple respects. I mean, there are some economic things occurring, but as far as that really impacting a lot of US companies, I don't see that as a very I see that as fairly limited right now. So to have a huge drop in the market here, it was fueled by the news in some ways. It certainly was. But it really was at resistance. And that's such a huge lesson for you and I to learn as traders, right? Because again, I had people asking me, Blair, why is the market falling? If you and I bought puts, if we went short on this market and we thought I could potentially profit if the market's moving down, and we didn't understand this, right? Then we could think that this is going to go on a lot longer, that it's going to drop a lot further. And what if we miss some of the buying opportunities because we think it's just going to keep going down? Why? Because the news is still bad. But when you know how to draw these lines, let me go ahead and delete this one for now. If you know how to draw these lines, again, 1, 2, 3. We were just in Dallas this weekend with a group of new traders at our Trade Surge event, right? It's a live event we do. We were teaching them the basics, right back to the basics. 2 points make a line, 3 points make a trend. What happened? 1, 2, 3, boom. And that's what we hit. Once it starts to fall, the news media goes out and goes, what's going on right now? Well, clearly it's Russia, so the market's dropping. Blair, are you saying that didn't have anything to do with the market going down? No, I'm not. I'm not saying it didn't have anything to do. But I am saying, number one, it's important that you and I understand what's happening on the chart first, then the news. Then the news. Because this wasn't ultimately news driven, this was chart driven. The news did, number two, fuel the fire. It did. It did. It fueled fear, it fueled uncertainty. And that just said, you know what? We could sell off at resistance and now it's going to accelerate. And it did. But look what happened when it got down here, right? We just drew a line. Once it hit that, it makes perfect sense, right? It's parallel to this top line. Boom. Really what I'm watching for now is what happens in, you can see it here. I'm going to zoom in a little bit. This resistance line again, which is pretty much where we are, along with that white line, that 20-day moving average, which is tracking right along that slope there. So as this thing moves and opens tomorrow, we're looking for a break of this line right in here, or are we going to repeat and move back down, right? This market has been consistently moving lower now for some time, right? And it's not typical for the S&P 500 to stay in a downtrend for too long. That is atypical. It's not something that you see a lot. You certainly see corrections and there are short-term downtrends, but not something that it continues in for very long. Are we headed for bear market territory, things like that? Well, I certainly think, and I've talked about this on previous episodes, I certainly think there are some conditions lining up predominantly with the Fed that gives us cause to say, you know what, I ought to learn how to handle a bear market, right? How to protect my long-term money, how to make money when the market goes down. Those kinds of things are important because we are getting closer to that event. Here at Tradeway, we don't guess. We don't guess and predict exactly when we think a bear market's going to happen. But we certainly can look at the conditions and say it's becoming more or less likely. And I can tell you right now, it's becoming more likely. There's a lot of instability here. All right. We're getting on the backside of COVID in the United States, I think, as far as a lot of the fear factor, as well as seeing the federal government starting to ease a lot of those restrictions. State governments are starting to roll back more aggressively. Some places have been open for a while, like here in Texas, but a lot of other places have still had things in place, and that's starting to roll back. But we're also looking at the Fed raising those interest rates, and that's such a huge part of what precipitates a lot of the economy shrinking. So we're looking at potential weakness in the market throughout the year. Certainly, I've said for a while now, in the beginning of this year, I can see us having much more volatility this year than we've had in the last few. I don't know if we're going to see as consistent growth as we've seen in the last few, and certainly 2022 is living up to that, because as you can see here, where did 2022 start on the chart? Right here, right there. That's literally January 1st right there, and it's been volatility ever since. So going to break this line or not, that's what we want to see. If I see that, I want to see it break up through that line, pull back and make a higher low and move up from there. Let the buyers take control here. There's an old saying that says, don't try to catch a falling knife. Let it hit the ground and move up. It's in a downtrend right now. So if I went out to buy something right here, that's after 3 days, right? Moving up and close to resistance, and it starts to fall, I'm going to look back on that and say, you know what? I just bought stocks at resistance. Why didn't I let it prove to me that it has enough strength to break through? And then we'll see what happens from there. Okay. That's definitely my perspective on that. But main thing, the war, and you said, Blair, you haven't really said anything about the actual war in the news. Well, because that is not necessarily going to affect our stock market in the same way, right? It's not necessarily going to matter to the big money here in the United States. Now, what could matter? Let's jump over here for a second. What could matter is if the fear factor starts to get really high. That's number one. If the fear factor starts to get really high, look at oil and gas, right? We've only got a couple of things that are in the green here today, right? There's a few, right? Biotech is up there, agriculture is up there, but really the big green ones here are what? Aerospace and defense, no surprise there, right? Lockheed up 6% today, right? So you've definitely got defense stocks going up, right? What else? Oil and gas, right? That's where I see a lot more fundamental impact coming because of Russia, obviously being such a huge exporter of oil and gas. You've got war in Russia. So defense stocks, oil and gas stocks, that makes sense. So I'm speaking more of the broader market here, of what's going to be impacted. Interestingly enough, those two areas are being positively impacted. But I think overall, look at that, you can see energy way up compared to the rest of the market as they expect prices to rise because of what's happening. So I'm not saying that there's not any impact. I'm saying bad news in general, right? Even terrible news, humanitarian crisis, doesn't necessarily move the market. It has to be something that is intricately affecting companies, because what we're looking at when we look at the stock market is companies. And a lot of people around Tradeway, in fact, most around Tradeway are Christians. They're Christians. Now, I'm not saying other people that aren't Christians don't have compassion. I'm not saying that at all. But I am saying that working around Christians in the stock market, there's tremendous amounts of compassion, not just for what's going on in Ukraine, but over the years, you've seen different things happen around the world. And you watch the market initially react, but once they digest it, they kind of blow it off, right? If the U.S. economy is doing well, they're not going to be affected much by Russia. So, well, Blair, why is the market going down then? Well, it's going down because I think they are more sensitive to interest rates, right? And if we start to see some instability, rising fuel costs, things like that, it's only going to make inflation worse, which is then going to bring even more potentially aggressive changes to interest rates. So I think that's the concern, and I've been saying that on webinars for a little while now. But for us, the main thing to keep it simple is to really look at the pattern here, right? We got to look at this pattern. Let's see what happens. If it breaks up through there, I suspect you're just going to see the headlines and it's just going to say, it's not as bad as we thought, or they're going to be hope about peace talks, right? They had peace talks today. Nothing came of that, unfortunately, yet, but they're going to agree to meet again. And if it drops, they're going to find something negative and they're going to pin it on that. And sometimes when you see the market down, which it was this day, right? It gapped down and moved down. The headlines, all negative. But by the end of the day, what were they? Right? They're on the positive side. Market hits support, bounces up, they change the article. I'm not saying there's no integrity in that at all, but I'm saying the chart comes first. And if you could learn anything as a trader, that is the most important thing that I would say in terms of this discussion that we're having. It's to say chart first, and then go to the news, right? Benjamin says, woohoo, I made it to the live. You sure did. Appreciate it. For those of you that weren't on before, we don't have connection on Facebook here. Typically we do. So friends are joining us from YouTube. Kid Gamer KD, do you see a bull market coming soon for the S&P 500? All right, well, technically we're still in a bull market. Okay, so on the technical side of things, we are still in a bull market. We're not more than 20% down from this high right here. So again, technically we're in the bull market still. Now, if your question is more hitting on, do I see us getting into an uptrend, right? Where we're advancing. See here, we're advancing and now we're declining, right? We've had a couple of days up, but overall the trend is declining. And here the trend was advancing. So we're still in correction territory, very much so. Just a few days ago, as far as trading sessions go, we were a whole lot further down than we are. We're up to 4,400 almost here, and we were down almost to 4,100. So in just a couple of days to see 300 points is pretty significant. And we basically did that in 2 days. So we had a couple of big days, but you know what happens? That can suck in all the, buyers who don't have a skill set. They go, hey, it's moving up, man. I don't want to miss out. There's the FOMO. And then they jump in, and that might be when we hit resistance and drop off. So we really want to see some confirmation in here. As for, do I see a bull market resuming? And again, I'll interpret that to mean, do I see an uptrend happening? Let me go ahead and zoom out a little bit. Look at this uptrend, right? Do you see that happening again soon? Well, I don't think our bull market is over. I don't think it's over, right? We've got some catalysts right now. We do have rising interest rates. We do have inflation risk. That's a big thorn in the market side in terms of just growth like we've seen. And then we do have some that geopolitical instability. Russia is a big player with energy. If we see instability spread across Europe as a result of this conflict, then we're starting to see potentially even more inflation risk, which then could affect the Fed. And then we see more downside pressure on our economy and our companies, and thus on the market. So I definitely could see that increasing, and thus it's going to be weighted down. It's going to hold down prices, meaning we could stay in a negative space longer and not get back into a trend like this, right? But I will say many a times I've thought things were going to remain negative, and the market would rather go up. They would rather buy and see the market advance. If I go over here, I'm still with you on your question. Pull this up here. Just even looking at the NASDAQ, this is also catching a bounce, right? If we see tech stocks, let's go ahead and do this so you guys can see. I mean, this is definitely worth paying attention to. I'm going to have to adjust it a little bit, but let's do something like that. Yeah, top here, little high there, little high there. I could even maybe go like this. You know, you could even say, honestly, we're just starting to poke through there right now, but not quite because we've got that 20-day moving average. So my whole point here is if tech stocks continue to advance, then we're going to see the S&P rise. We're going to see the S&P rise. Most likely, that's typically how it happens. So what do you need to see, right? This is what we love to do at Tradeway. You asked me this question, you know, when's the market going to get back into an uptrend? Well, you're going to know. See, we don't need to guess. It's good to look at the factors, but we don't need to guess. We can know when it does. What's an uptrend? Higher highs, higher lows. What's this making? Lower highs, lower lows. So what do we need to see? We need to see this thing break through, right? And then we need to see it pull back and move up. In other words, we need to see it start making higher highs and higher lows again, right? If it pulls back and stops here, like let's use my arrows so you guys can see what I mean. All right. Let's say the price pulls back like this, okay? And then it actually doesn't, oh, let me do that. Okay. For some reason, it's not letting me drop my arrow. So I'm going to get off my chart for a second here. Try that again. Let's try that again. Price comes down. Boom. Okay. Then it doesn't make it all the way down to here, though. It goes from there and then starts to come up. What does that mean? It means you just made a higher low. You made a low, you made a high, you made a higher low. That means the buyers stepped in sooner than we expected because we thought maybe they'd get back down here again. That's the pattern. So what does that show us? It shows us strength. And then they have the strength to break this line that they haven't been able to break for some time now, a couple months. Okay. So those are two things right there that just the chart tells me, but it doesn't just tell me technical information. It tells me what other traders are thinking. They're thinking this is worth buying before it gets back down here and the buyers take control. And then it gets to resistance and it tells me they think it's worth buying. So they push it through resistance. Now we've got some strength. So I may not know when this next bull market, or excuse me, this next bull trend is coming, right? That uptrend. But I can start to see when strength comes back in. And that's going to make me feel better about actually buying stocks again. Until I see that, I'm not doing much for that because it's ultimately still in a downtrend. And I don't want to buy stocks in a downtrend, right? I want to buy stocks in an uptrend, right? If I have options training and I can do some of that, then there's some shorter term things I can do in here. There's some things I can do as it's moving down, but that is a different skill set. Okay, so that's some of the things you can do there. Love that. Appreciate that question. If you've got any other questions out there, please let me know. Be happy to jump all over that. Also, something we've been looking at, just to give you guys a preview. Let's see. I don't see it in there right now. We've been looking at a couple of patterns in our Insider Plus. Okay, I'm not going to go over a lot of details here, but trading in this market is hard. At Tradeway, we've got something called a squirrel market alert. If you're in our program, we tell you this is not a bull market or a bear market to us. It's a squirrel market, which is a term we use to say it's squirrely, it's volatile, it's unpredictable. It's more unpredictable than normal is what that means. And you could look at a good pattern and it's still not working. It would otherwise work most likely, but it's not working because we're in a squirrel market. And I can tell you right now, we are in a squirrel market, right? Where good patterns are just not working. Okay. There's another one we posted and it's definitely holding it back. So understanding when to trade, very important, right? Understanding how to manage the risk in long-term money what I've showed you today and what I've even talked about fundamentally is important for us as traders, but it's also important for you guys out there who have long-term money. A lot of people are wondering what is going on, right? Things have been really unstable this year. What's going to happen to my long-term money? That's one of the things we teach you. And using this skill on the chart here can definitely be one of the ways that you can protect that long-term money. And of course, that's what we want to help you be able to do. All right. Benjamin's saying puts. That is one of the skill sets you could use. There are multiple others. Puts is just one of them. When the market's moving down, there are multiple option strategies we could use that are suitable, right? We can always use any strategy if we want, but there are multiple strategies that are suitable when the market's moving down. So if you don't know how to do that, head on over to tradeway.com, right? Tradeway.com. You spend 2 days. I did a class with 50 people in it. Oh, it was about 3 weeks ago now. We did a 2-day event online, everybody from their own home. We had a great time together. We got into some scripture. We got into the markets and taught the foundation to the whole Tradeway system, getting more into the details. And that's something you can find tradeway.com, as I said, right there on the main page. You can sign up for the next step one. And we would love to have you on there for that. Okay. Benjamin asked me a question, which is an interesting question because it asks me if I have any questions that I wish somebody would ask. You know, that is actually a phenomenal question, Benjamin. It may require me to take a second and think through that. In fact, I think that might be a phenomenal Market Monday topic. By the way, I say this, Benjamin knows this. I say this from time to time. If anybody out there has a specific topic that they would like us to go over in Market Monday, you can always email that. Of course, you can put it in the chat while we're here. But those of you who are not joining live, if you may have an idea or if you think of one later, you can always send it in to support. I blanked for a second there. Support@tradeway.com. Support@tradeway.com. Market Monday. Okay, Market Monday. And you can let me know if there's any questions you have or any topics you'd like me to cover. This one, are there any questions you wish someone would ask? I'd like to just think of one quick so I can at least give you one thing, but I think that's definitely a good thing we could do for an entire episode. You know, there are so many great questions, you know, and a lot of questions do get asked. I think some of them come more when we're in the program. People will ask questions there because we're digging into the content a little bit deeper. In fact, a lot deeper, right? So a lot of those questions do come up. I think for here on Market Monday, you know, one thing that I think is just a really great question to ask is, what's the most important job of a stock trader, right? What's the most important thing I need to know? Now, any coach could say a lot to that, and any of our coaches here at Tradeway would be tempted to do so. But I think the most important thing, if somebody asked this question, Blair, what's the most important thing you would want me to know about stock trading? I would say maybe I'll give 2 quick answers to that. The first one is that the job of a stock trader is primarily to manage the risk of trading first. We teach you how to do that. In fact, I taught you how to do some of that today. You maybe didn't know it, but I taught you how to do some of that today. Okay. It's not the primary job of a stock trader to make money. Whoa, what are you talking about? Of course, that's the primary job. That's the only reason I want to do it. No, I get that. That's true for me too. Right? But the primary way that we pursue trading, the way that it should be done, we want to let profits be the fruit of good trading. When you chase profits, you tend to break rules and do things that don't help you as a trader. When you keep the first thing managing risk, you give yourself the opportunity and the potential for consistent profits over time. If you get those backwards, then it's real hard, right? That would be one of the main things that I would say. If somebody asked me that question, somebody asked me, what's the number one thing you want me to know? Kid Gamer says, I have one. What's puts and how do I use it? Put options. Okay, these are options. You may not know what an option is yet. We'll touch on that in our step 1 class that I talked about. We're going to teach you basically what options are, but a put option is a way that you could potentially make money when the market goes down. Okay. Instead of buying the stock, you're going to buy the put option, and the option increases in value, meaning you could in that sense, or in that instance, you'd be making money, but the stock would be moving down. So you see my arrow there on the chart, right? Look at the down arrow. If you had a put, right? If you had a put and that moved down, you would be making money. Okay, you would be making money. So a lot of folks don't know what options are yet, but in short, they can make money when the stock goes up and when the stock goes down. And they give you leverage, right? They give you leverage. They can be potentially very profitable, and you pay a fraction of the price that you pay for the stock. Now, they have some unique risks to them, so we teach you how to use them safely in our course. But they also give us flexibility. When the market's going up, we can use them. When it's going down, we can use them. When it's going sideways, we can use them. There's lots of cool things we can do with options. So we focus on that a lot. Stocks are what most folks know about, and stocks can be great. But like you said, when is the market going to be in an uptrend? Because that's a good time for stocks, right? The last bounce we had at support for an uptrend was right here. It went up, made a lower high, and failed, right? Here was a great bounce. Here was a great bounce. Here was a great bounce. So that was more for stocks. So when can we get back to stocks? We're not sure yet, but options gives us flexibility. So we have plenty to do in the meantime. Okay. Great question. All right, everybody. I'm going to take Benjamin's suggestion here. Appreciate all the comments and questions today. And I'm going to do a whole episode on that in a week to come. I don't know exactly which one yet, but we're definitely going to do that. So I appreciate you throwing that in there, Benjamin. And if you guys have any other questions, let me know. Again, I said you can email support@tradeway.com. Please do, right? Love to hear from you. Thanks so much for being on tonight, and we'll see you next time.